The single most important proxy for the market has been yields over the last few weeks, Scott. But I think there's been a pivot, and there's been an uncomfortable pivot towards now oil seems to be leading the market. Obviously, yesterday, the deterioration in oil reflecting the concerns as it relates to COVID surges in India and Europe, that led equities lower. Today, you're seeing oil pricing higher, so that's kind of giving some support to equities. So for me, overall, I had been leaning into that cyclical trade in my portfolio. I had the heavy exposure towards banks, in particular regional banks, and understanding that we've got this little bit of a dynamic change away from interest rates. I think it's time to lean back towards the middle and strike that portfolio balance.
All right. So, Kate Moore, I want you to listen to a soundbite from a conversation we had yesterday with Eminence Capital's Ricky Sandler, sort of about the overall environment, where we currently stand after a remarkable run, and where he thinks we can go from here. I want to talk about it on the other side because it hits on many different levels. Here's Ricky Sandler.
The amount that the government has already done, the amount that they're talking about doing going forward are unprecedented levels, things that nobody that has been investing in these markets have seen. So we think that the level of economic strength over the next 18 months is going to be enormous. And so, I don't know in terms of percentage terms, but a good amount. But certainly from a timing standpoint, it doesn't feel like the right time to get off the train of the market.
Kate, that's what we'll focus on. What Ricky Sandler said, it doesn't feel like the right time to get off the train of the market. Does that match up with how you feel?
Yeah, that's right. I mean, the one thing I think, Scott, that's a little bit different is I think we're going to tread water for a little bit in the very near term. Maybe the market's going to be a little bit more range bound. We're going to see these daily rotations like today where energy, industrials, and banks outperform, and other days like yesterday where we saw some of the tech and more long duration equities outperform. But I think Ricky made a really important point here in terms of sort of the engines firing for the economy. Of course, we have the restart. We also have, delayed spending for lots of income cohorts. And then very importantly, and I think Ricky alluded to this, the policy stimulus is just phenomenal. As a percentage of GDP, it's nearly double what we saw during the financial crisis. So, there's a lot of reason to be pro-growth and pro-equity, but recognizing that there are going to be these gyrations, back to the point that Joe was just making in terms of, the movements in yields.
And at the same time, Steve, the Fed chair, Jerome Powell, just today said, look, I think that inflation is going to be temporary and transitory. And if it's not, we'll do what we have to do to deal with that. We'll use all the tools in our toolbox. He used the tools term yet again. Does that make it impossible to be anything but positive on the market, like Ricky Sandler said?
Well, it depends where you are positive. So if you recall last week, I was very positive on the market, thought we'd see this major uptick in trading in levels the day after Powell's speech. And then I was wrong. And as I thought about why I was wrong, it's because the market's not believing his conclusion. It's focused more on what's happening real time today. So you can't say that inflation's going to go past 2%. He's saying it's transitory. The market's disagreeing. So that's why you're seeing the continued pressure on tech. So you do have to be in the market. You can't afford not to because otherwise you're going to be in bonds, and bonds are going to continue to sell off. So look, I think it is a positive backdrop. I do agree with Kate that right now we're in a situation in the market where we're sort of in nowhere land. And the market has started to look at the negatives in terms of the glass being half empty rather than the glass being half full. Here's why I say that. Despite the major ramp up in vaccinations in the U.S., what was driving the market yesterday? The market was driven by the increasing closures in Europe and the pandemic possibly getting out of control, which I don't believe is the case. So it's not focused on the economy flying. It's focused on inflation occurring. Now, those are transitory as well. So I do think, speaking to the stimulus, we're in a very good spot, but there are going to be rough points ahead, particularly with the VIX trading as low as it is right now. Okay.